Today, I'm also talking about the global minimum tax. Disclaimer. The following information is intended only to be a guide. It must not be relied on in or applied to specific situations without seeking proper professional advice. And this material is prepared by appropriately adapting the content provided on the Global Minimum Tax Portal provided by the National Tax Service of Korea in 2025. Okay. And the entity is subject to filing. For each fiscal year, the GMT rule apply to the constituent entities of the M&E group if the revenue on the consolidated financial statement of the ultimate parent entity equals or exceeds 750 million euro in at least 2 of the 4 preceding fiscal years. As I mentioned before, 750 million euro is the threshold. This means the total worldwide global revenue of the of a group, okay, revenue group, and then the criterion is, for instance, this year is fiscal year 25, for example, then 24, 23, 22, 21. So 21, 22, 23, 24. The annual revenue is over 750 million for 2 of the 4. This year, or this year. Depends on the situation. And the payer is constituent entity located in Korea, for example. Now I'm mentioning about I'm focusing on the subsidiary located in Korea of a multinational entity. Constituent entity located in Korea, domestic constituent entity. That belong to the same multinational enterprise group may have the following tax obligation. Okay, number 1 is when the domestic entity is the ultimate parent entity of the group. Okay, firstly, QDMTT, qualified domestic minimum top-up tax is not applied in Korea yet. And number 2 is IIR. IIR is applied only to the parent entity. So when the domestic constituent entity is the ultimate parent entity of the group, we do not deal with this situation because I'm focusing on the Korea subsidiary of a multinational entity. So this will not also apply. And number 3 is when the domestic constituent entity is a subsidiary and ultimate parent entity does not apply GMT, like United States, China, India. Okay, this is ultimate parent entity, and this is the Korea subsidiary, for example, subsidiary. Korea, the first priority, QDMTT is not applied. Number 2, IIR is not applied because Korea subsidiary is not a parent entity. The number 3, UTPR can be applied. When the domestic constituent entity is a subsidiary and ultimate parent entity does not apply GMT rule, then UTPR, under-taxed payment rule, will be applied. The domestic constituent entity may be required to pay its proportionate share of the allocated top-up tax amount as corporate income tax in Korea. This is very complicated, and this job should be done by UPE only. The Korea subsidiary cannot gather all the financial information of all the constituent entities around the world. We believe that the allocation of the UTPR will ultimately have to handled by the ultimate parent entity. This is because the allocation covers constituent entities around the world, and only the parent company has access to the financial and related information of all global constituent entities. In addition, to ensure a constituent and appropriate allocation based on group-wide principle, unified principle, the task must be carried out at the top of the group. So therefore, the Korea subsidiary cannot independently calculate UTPR. So it will simply pay the amount allocated by the headquarters in accordance with the instruction given by the UP. So the information should be given by UTP, ultimate parent entity. In Korea, the QD entity has not yet been implemented. Therefore, for Korean subsidiary of MNE, the first step of QD entity is not applied. Number 2, IIR cannot be applied. Number 3, accordingly, at present, the third step, UTPR, is the only scenario which Korea constituent entity may be required to pay allocated top-up tax. And a person required to submit statement. There are two requirements in the QMT. The one is payment of top-up tax. The other, number 2, is submission of report, information report. This is related to the actual payment of tax. This is related to the submission of document. This is also very important because the penalty when failing to submit the document appropriately is very high, 68,000 US dollar, 100 million Korean won equivalent. Very high. So this is also very important. The submission of report has 3 types. Number 1 is Form 53. Number 2 is Form 54. Number 3 is Form 55. A Korea constituent entity must submit the global information return, for example, 53 and 54, for each fiscal year to the tax office via electronic communication, through electronic communication. So simply submitting the printed matters is not allowed. Only electronic communication method. Electronic method is allowed. And the payment of the top-up tax and the submission of the relevant report is the same, that has the same deadline, 15th months from the fiscal year end and 18 months for the first fiscal year. First fiscal year means the fiscal year beginning on or after January 1st of 24. Okay. If the Korean constituent entity is liable to pay the allocated top-up tax amount in Korea, it must additionally submit the top-up tax return. Okay. As of UTPR, for example, if the Korea entity has the top-up tax to be paid into KoreaTax office, in that case, the additional form 56, 57, and 58 is required. 56, 57, 58 is required. And then when there are two or more constituent entities in Korea, a designated constituent entity may file the global income return for every entity in Korea. Sometimes Korea has like a subsidiary A, subsidiary B, or branch office C, for example. In this case, this group has 3 entities in Korea. In that case, the group will designate one of the 3, for example, subsidiary A as the reporting entity. Then subsidiary A can do all the reporting on behalf of other subsidiaries. Designated filing entity in Korea. When there are 2 or more constituent entities in Korea, a designated constituent entity may file the global income return for every entity in Korea. And this is also very important, Form 55, because Form 53 is 56 pages and in Korean. And this Form 54 is 65 pages in English. Of course, they are communicated using electronic method. Anyway, this is huge, the big pages. But Form 55 is only 2 pages. Simple, very simple. This is actually this means that a Korea constituent entity is exempt from filing the global return. A certain cases, the Korea constituent entity is free from submitting Form 53 or 54, exempt from filing. When located in a foreign jurisdiction, belong to the same group, files the global information return with the tax authority of that jurisdiction, which means that, if, for instance, Spain has the GMT rule. Most of the European countries has GMT rules. So Spain has the ultimate parent entity, and Spain has a subsidiary in Korea. In this case, if Spain does not file the Form 53 or 54, for instance, the title is Global Information Return, then the Korea company should do that, should file the Form 53 or 54. But if Spain company, the parent company, do that filing, like a Form 54 of global information return, then, and also the Spain and Korea has the information communication system between the tax authorities, then Korea company only submit 2 pages of simplified form, which means the title is the report on information of the foreign constituent entity, Form 55. The title is this Form 53 or 54 is global. Global means global means the globe means global anti-base erosion. Global anti-base erosion information return. This is huge pages, but the simple form is report on information of foreign constituent entity. So in this case, Spain filed the global information return. So Korea company, Korea subsidiary only submit the Form 55. The title is Report on Information of Foreign Constituent Entity, which submit the Form 54, Global Information Return. Okay. Korea constituent entity must submit the report on information of the foreign constituent entity form number 55 to the tax office by the filing deadline. When the foreign constituent entity file the global information return. Okay, and if the deadline, okay, deadline is, as I mentioned before, the deadline is the two obligation, payment of top-up tax, and number two, second obligation, submission of report, information report should be done after 15 months. Government give 15 months preparation period. So, for instance, for fiscal year 2024, it is, for example, January 1st to December 31. Then, in the first, this is the first period, first fiscal year of GMT. So, in this case, 18 months is allowed. So this means 2026, June 30 of 26 will be the deadline. And the second fiscal year, which is fiscal year 2025, for example, January 1st to December 31, then 15 months or 15 months. Then 15 months is June 31, 2027. Okay, so this is the deadline to file the submission report and payment of top-up tax, if any. So payment of top-up tax is done when the computation, when there is a top-up tax to be paid. But submission of report should be done regardless of the payment of the top-up tax. So this is a must. And as I mentioned, the penalty for ignoring the submission of report is very high, $68,000 US. Incredible. Okay, so. And if the fiscal year is like a June 30, for example, so in this case, July the 1st, June 30, in this case, 18 months equals December 31 of 2026. Okay, so, and 2025, if this is July 1st and June 30 of next year, then the 15 months means September 30 of 27. Okay. This is the rule. Thank you for watching my YouTube.